Hello investors, welcome back to your number one place for all your investing needs. So we haven't done one of these videos in a long time, so basically what we're going to be doing in this video is going over my dividend portfolio. So this is my dividend portfolio that I hope to continue to grow over the next 10, 15, 20, 25 years until I retire. So we're going to be adding more money into this portfolio every month. We try to add money into the portfolio and invest into some dividend stocks, get some good deals. What we do is we receive dividends, we go ahead and reinvest that and drip it back into the market, which we receive more dividends from just by reinvesting our dividends that we receive. That is something that we've been doing in the past couple of months and the past over a year now since we started, and now the portfolio is worth at around $27,426.62. Earned dividends so far in the past year has been about $500. Now, something to take a look at obviously is last year when the account started around June, so about a year and 3 months ago, the portfolio value was only about 5,000 pretty much throughout the whole year. And then this year, when the market started to crash, we added more and more into the portfolio. As you can see here, we added more, and then the market took a crash, and it was worth about 9,000. And we continued to invest more into the portfolio, and it continued to grow. Now, I'm going to show you why I invest into dividend stocks and the power of compounding interest. So right here, we're going to go into the compounding interest calculator real quick. And right here, it says your initial investment. So let's just say, give it a random number, 25. You started off with 25,000. Let's just say you're adding $500 each month. And then length of years, let's do 25 years. And then let's just say your average dividend is about 3.5%. So let's just say that that's no growth. So let's pretend that the stock market doesn't move at all and it stays at zero. None of your stocks are growing, none of them are going down, and you're receiving a 3.5% dividend. Well, these are the calculations you would get right here. Actually, is if you continue to do that. So at 3% return. After 25 years, you would have invested 175,000 with a return of 292,000. That's how much you'll be worth in the future. But obviously, estimated rate interest rate is obviously going to rise as the market rate rises about 7% average plus a 3% average dividend. So let's just say 10%. That is more likely to happen with your portfolio. You'll have about $860,950 after that, and your total investments over those 25 years is going to be about 175,000, and your future value is going to be about 860,000. So you made a gain of roughly $700,000 just off of that. Now, before we get into the rest of the portfolio and I show you guys all of my stocks that I have in the portfolio, go ahead and smash that like button for me, subscribe to the channel, and turn on that bell notification so you get notified every time I upload a new video. I make videos about top stocks, top penny stocks, dividend investing, and all kinds of dividend information. Also, leave a comment below. What is your favorite dividend stock in your portfolio? Let's take a look at the portfolio. So one thing right here to look at in my portfolio is we have our portfolio separated into different sectors. So we have the consumer, the health, bonds and ETFs, real estate, utilities, telecommunication, finance, and logistics, which is one that I added recently. So let's take a quick look right here and go through all of the portfolios and check out how they're doing in each slice in each pie. So if we look at here at this pie, this is my consumer pie. Obviously, our total current value is about $7,846.91. Right here, we have a gain of about $1,040 on this one. So far with this one, we've actually gained about $80 in dividends, which is pretty good actually. Now the thing is, in here in this portfolio, we own a couple of different stocks, and I'm going to be explaining why I have these stocks. So Walmart. Obviously, Walmart is growing a lot right now, and they have Walmart Plus coming up. They're also one of the top competitors to buy out TikTok. Obviously, we have Walmart, we have Oracle, and we have Microsoft that are all in competition. And there's a couple of other companies that are trying to do it, but Walmart seems to be very close to a deal. They're trying to do some partnerships with other ones, but we're doing very, very well. Even though we only recently started getting to Walmart, we're up about $228 in that position. After that, we have the Home Depot. Obviously, Home Depot is doing amazing right now as the pandemic is going on and everybody's going to the stores and buying things in order to do renovations at home because they have nothing else to do, and we're up about $190 in that position. Coca-Cola, we don't even have to explain that when you guys know, just like Warren Buffett, one of my favorite dividend stocks to invest in, we're obviously up on that one, $102. Then we have McDonald's, which is another position that I'm actually starting to build up on. I used to have a lot of it, sold it off, and now I'm starting to add some more as McDonald's is starting to hit those all-time highs and starting to trend on up higher, and obviously gives me a great return. After that, we have Starbucks, which is doing it pretty decent right now. It could do better, and it has a lot more room to grow. And then after that, we have Lowe's, which is pretty much just like Home Depot. I mean, it gives you pretty decent returns, in my opinion, with a decent dividend, which I like. And same situation as Home Depot. As the pandemic is going on, the stock is rising because a lot of people are going to the stores and they're making a lot of profit. After that, we have Pepsi, which is doing pretty decent for me, but it's actually my lowest one in this portfolio. It's not doing as good as Coca-Cola is for me, but it's still doing decent. We're only up about $8, but this is obviously a dividend portfolio, and all of these stocks are some of the most beautiful dividends that I could have picked in this, consumer sector. After that, we have our health sector. So we're only up about $101 on this sector. We've earned over $73 just in dividends, and the health sector we have is worth about $4,460. If we take a look, we only have three different stocks in this portfolio. They pay a decent dividend, especially Pfizer has a very nice dividend. But the first one we have obviously is going to be Pfizer. We're up about $31 on Pfizer. After that, we have Johnson and Johnson, which is up about $60.67, and then we have ABBV, which is actually one of my favorite health companies actually that I own right now. But they're only up about $23. But I love all three of these, and obviously with Pfizer being one of the top competitors to get the Rona vaccine, they're moving pretty far into the stages and getting through those approvals. So Pfizer is definitely one to keep an eye out on because it could make a very, very big move if they are the first one to create a vaccine for us. Obviously, Johnson and Johnson is a player in that too, but then we have some bigger companies like Moderna and Novavax and other companies like that. So after that, in our portfolio, we have that bonds and ETFs pie. So this is not my best pie. I'm actually down about $13.41 on this one. The value is $3,694. We've earned about $90 in dividends from this one, and we have three different bonds and ETFs in there. So the first thing we have is SPHD. So this is going to be the S&P 500 high dividend, low volatility ETF. And we're actually down on this one, obviously, as when the market crashed. I kept loading up more, but I should have got more on the dip. I bought too early. So we're still down about $111 in that position. Then we have the SMH right here, semiconductor ETF, and this one is actually up for me about $98.46. And then last but not least, in this one we have VNQ, which is the REIT ETF in our index fund. So that one is down about $40, but REITs are starting to come back up. So I'm hoping that this one is going to continue to trend on up and be higher soon. Let's get straight into the next one. After that, we have the REITs. So this is going to be our real estate pie, and right here it's valued about $3,629. We received about $82.95 in dividends from this one. So this one is one I definitely want to add more to because REITs still have a long way to recover. And obviously, actually, Store Capital, if any of you guys follow this one, I believe there's some big investors that are investing into this one. They believe in it in the future. So Store Capital, definitely one I'm going to continue to add on. And it's actually the one that I'm green on, $133.97 up. And then we have Realty Income, another beautiful one that people love to see. It's a monthly paying dividend. Store Capital is a quarterly paying dividend, and then Realty Income, we're down about $39. And then we have Welltower, which is our lowest one. That one is, out of the three, my least favorite, and we're down $112 on that one. But like I said, they have a long way still to recover, so I'm not worried about it in the long term. Next up, we have the utilities, which we are valued at $2,922. Earned dividends, $73.39. So in this one, we're doing some brand new things. So we have the Southern Company, SO. We're down $14 on that one. We have Dominion Energy, which obviously some big investors are also investing in. It has some potential in the long run. We're up about $27 on that one. Then we have Duke, which we're up about $4, so not too bad. And then Waste Management is one that I currently added, recently actually. I used to have it in my growth portfolio, but I decided to transfer Waste Management into my dividend portfolio as it doesn't really grow too much, obviously, but it has a decent dividend, so I decided to add it here. And it's only been here for about a month or two, and we're already up about $13. And we've had the Southern Company for over a year, and it's actually down, so it's worth getting in on. And then we have obviously Chevron. Chevron is probably one of my worst investments, as obviously gas and stuff like that is going away. I mean, I feel like in the future we're just gonna have electrical cars, just like Tesla and all that other stuff. So Chevron is probably one of my worst investments, and kind of wish I didn't really invest into it. But since I already have it, I'm not gonna get rid of it. But I will not be adding any more to the portfolio. We're down about $78 in that position. We're probably never gonna gain that back unless some miracle happens. But we still have it in the portfolio. It's there to have it, so not too bad, I guess. After that, we have our telecommunications. So this one is valued about $2,031 in dividends. In the past year, we received about $57 in dividends. So we only have three stocks in this one, but they're all very, very nice dividends, and they're all competitors of the 5G. They want to be the 5G kings, I guess you could say. So we first off we have AT&T, which we're down about $48 on that position. Next up, we have Verizon, which we're up $57, and then we have Comcast, which we're up about $40. So not too bad overall. We're up on that sector, so that's a good thing, obviously. After that, we have our finance sector. This is a sector that actually, obviously, just like the REITs, has still not recovered from the crash, and it is definitely one that I want to grow and continue to add in my portfolio as well. So this one is valued at $1,835. We received over $30 in dividends so far. I only own two stocks in this one. I actually used to own more, but I decided that MasterCard and Visa are more growth stocks as they grow faster. And I decided that their dividend was too low. I think the dividend was like less than 1%. So I decided to kick those two out of my dividend portfolio. I decided it wasn't worth to have those two. And I stuck with JP Morgan Chase, which were down about $50 on, and then Bank of America, which were up $28 on. As you guys know, Bank of America is one that I continued to grow. I actually started adding to it maybe half a year ago, maybe a year ago. I started to add to Bank of America, and I wanted to grow this one, and obviously that's kind of worked out for me. I kind of want to add more definitely on Bank of America, but JP Morgan Chase as well, since I'm down on that position. So once it recovers, I'll be profiting. So I'm buying at actually a lower cost instead of buying at a higher cost of Bank of America. And then after that, we have our next sector, which is going to be logistics, which is the one we just added to the portfolio. So we invested about $1,000, a little bit more than that. And the only one we have in here is UPS. So UPS, I invested in since they have some major things going. They're hiring so many more workers for the holiday season, and this pandemic is causing them to have more workers. More packages are being, delivered, so they need more workers. People are working a lot of overtime, and UPS is going to be doing amazing. If you guys follow their earnings, actually a few months ago they did amazing, and they have earnings coming up in about a month. Also, if you're following FedEx, they just had earnings last week. They destroyed earnings. They blew it out of the park. It was just amazing earnings. FedEx was up about 10% that day. I believe it was up. It stayed around 7 or 8% after it did a little bit of pullback. But FedEx did amazing on earnings, and UPS actually went up a little bit too. But then it did a pullback as well. So UPS definitely one I want to hold for the long term, and it has a decent dividend. Now, one thing I will say is I actually have UPS and FedEx in my growth portfolio, which I'm going to be making a video on in the future, obviously. But yeah, so it's kind of weird. I have it in my growth and my dividend portfolio. This is how much I plan on holding right now. That's why I have it here. But obviously, in my growth portfolio, that's where I buy and sell stocks more often. So I decided to have it in that portfolio instead. But so overall, these are my pies that I have. The different sectors that I have, and how much I'm up and how much I'm down. As you can see, certain sectors are doing better than others. We have three green sectors. The rest are kind of red, not too bad actually. The only one that's really red is going to be the real estate one, the REITs. But obviously that's going to come back in the future. I'm not really worried about it. But another good thing is that means I can just continue to add to the ones that are red, and when they rise on up, I'm going to be making more profits since I'm buying at a lower cost. But I'm also adding the ones that are green, like consumer. I've been adding to the consumer one a lot actually recently. So it all works out. But yeah, so the portfolio is valued at that right now. We're just going to continue to grow it. Like I said, as you can see here on the graph, we're just adding more and more. We've received over $500 already in dividends in the past year, a year and 3 months or whatever. So our average rate is about 3% return on that on our portfolio, obviously. So let's just say we're around 30,000. So 30,000 at 3% rate. We're going to be receiving about $900 in dividends yearly. I think the $900 yearly is pretty good actually in dividends. Hopefully I can grow that. My goal obviously is to have about $1,000 in dividends currently per year, and we're gonna keep on growing that and growing that. Eventually, the goal is to live the FIRE life, as you guys know, FIRE, and just receive dividends, obviously, from my stocks that I own in the portfolio, and hopefully that can, pay for my bills, and I can just retire early, and live at home and continue to invest more and use whatever I need to do for my bills and stuff like that. But yeah, so what stocks are you guys owning actually? Leave a comment below. Like I said, what is your favorite dividend stock in the portfolio? I want to find all that out. And since we're on the topic of these dividends, like, I've received over $500 in dividends. Right here, actually, I have a chart. So this is my dividend passive income chart that I've been keeping track of. And if we take a look here, pretty much last year in April, so about a year and a half, almost a year and a half ago, is when we really started getting into these dividends. And as you can see, that first month in April, I only received $1.26 in dividends. The next month, $6, $9 after that, and then $28. Every 3 months, obviously, I'm going to get a big payout because that is, the quarterly payout stocks that I have in my portfolio. So you can see that every 3 months, the graph kind of spikes up. That's when I get my big payments. But you can see it was, steadily going up, about $30 in dividends, and then $57 here, dropped on down to about 30, and then we had this huge one in June 2020. We received $77.99 just in dividends, and then in July, $46. August, I have not updated or made a video yet, so I haven't plugged it into a graph, but I can tell you that September is going to definitely beat, I believe it's going to beat that $77. So stay tuned for that to see how much I'm going to see. Hopefully we break $100 in dividends in September. I'm not sure yet, but we're going to definitely find out soon. We're about halfway through the month, and I can already tell you that I received a decent amount already in dividends. So I think we're having a very nice shot of breaking through that $100 in dividends for the month of September, which is definitely nice to see, and I hope that continues to grow. We're going to have to update this graph actually because it only goes up to $100, so we're going to have to up that up a little bit. But the portfolio is doing good. You can see it's a growth, the linear growth right there. Everything's growing. So I'm receiving more dividends. I'm investing more into the portfolio. I'm receiving more back, and I can reinvest it. Like you can see right here, I have about $12 in my cash balance, which means I'm going to take that, reinvest it back into the portfolio, use the drip method, and then I can receive more dividends. And compounding interest is our best friend. Like we used that calculator earlier to see that. Obviously that graph, you saw that rise right there. So obviously that's the goal. And yeah, so dividends are your best friend, guys. So if you guys aren't investing into dividends, I would definitely do some research. Obviously, I'm not a financial advisor, so before getting into dividend stocks or any type of stock investing, do your own research and talk to a financial advisor about investing, especially if you've never invested into the stock market before. But if you guys are interested, I will have links in the description that you can sign up for M1 Finance and receive $10. You can sign up for Webull, receive 2 free stocks. And then we have our Robinhood, where you can receive a stock worth up to about $300. It ranges from $2 to $300. So links in the description for that if you guys are interested. And yeah, so this was the dividend portfolio, guys. Leave a comment below if you guys want to see any more content with my portfolio or anything like that. I will be making a portfolio of my growth stocks, obviously. So smash that like button, subscribe to the channel, and I hope to see you guys in the future. Goodbye.